get started, he's going to explain a little bit why we named the webinar like that. But again, I want to thank you for joining us. This presentation by the American Association of Private Lenders, or AAPL, and the crowd that came from Think Realty. It's one of the first webinars that we've partnered up together through the sisters companies because it just made the most sense for the information that Mike is going to offer today. He's got a broad range of information for a broad audience. So I'm your host, Chrissy Bro. I'm the Director of Marketing and Member Services with AAPL. And if you have any questions about today's presentation or even about the association, and Think Realty, I can help get you some answers there too. That's my email address there. Feel free to reach out whenever you get the opportunity. Just some quick notes over today's presentation. This is recorded, so the session is going to be available. Give me about 24 hours so that I can get it edited, trimmed, and uploaded to the website. It'll go on aaplonline.com. It's /webinars, but if you're just on the website, if you look under the events menu, then you'll see a webinars option there. We are going to take questions for today's presentation. They're going to get answered at the end. So as Mike's going on about and giving you all of this great wealth of knowledge, and something pops in your mind, he may address it, he may not, but go ahead and send us that question as you think of it, and we'll make sure that we get that either addressed during the presentation or we'll follow up with you afterwards. We'll base that on how much time we get left at the end. Again, this is a recorded presentation, so please keep yourself on mute and stick around all the way to the end for me, pretty please. We do have some bonus information about things that are coming from AAPL, from Think Realty, and I want to show you where to find Mike's article in Private Lenders Magazine. Okay, Mike, I'm going to do a transition over to you here so you can go over the agenda and tell our amazing audience a little more about you and why you're the perfect person to be presenting today. So guys, hang in there just as we get going here and do the transition for the presentation. And again, thank you all for joining us. Mike, whenever you're ready to rock and roll, it's all yours.
Okay, let me get this screen over here correctly. Hold on one second. Okay, hey, thanks. I want to thank everybody for attending today. This is, I know we have about 30 minutes, so I think we can get through this information very quickly. We have something for everybody. I know there are lenders on the phone. I know there's investors on this phone call as well. Just hang tight. If you're an investor, we're going to get to you here very, very quickly. I've got an agenda, and I'm just going to quickly go through this. We're going to talk a little bit about my background, just to highlight. I'm not going to spend too much time on it, just to give you a little bit of information about me and my experience, and just to kind of tell you like where I'm coming from. A couple of months ago, Chrissy asked me to write an article about new lenders working with new investors, and how you qualify an applicant for a hard money loan. So I wrote that article, and then she asked me to do the presentation on that today as well. So we're going to go through that, and then we're going to kind of switch gears, and we're going to approach it from how an investor can work with a hard money lender. And sort of as a bonus at the end, I'm going to talk a little bit about this. I have got a lot of experience, obviously, with working with a lot of investors and qualifying them for hard money since I'm in the space. And I wrote about that recently in a book, and I can say a little bit about that when we get to the end of the discussion here. And then we'll have some time at the end to take any of your questions. Okay, so a little bit about me. I've been investing since 2002. I've been lending since 2005. I actually got into lending, hard money lending by accident. I was buying some deals from a wholesaler friend of mine, and turned out he needed some money to close a transaction. I loaned him money. Subsequently, I loaned some other investors money during this time period, and just built that business since that time. So I've been doing this all combined, about 1,600 transactions since I've been in the space. About 1,250 of those are hard money loans, and about 350 of those are investor deals that I've done personally. That's both single family and multifamily. That's the space that I'm in, and that's how I'm going to approach the call today. Is really primarily from loaning on from a single family perspective. I have offices in Dallas, Austin, San Antonio. We cover most of the major areas in Texas from those offices. I've been a member of AAPL since, well, I guess for 4 years now. certified private lender. I'm also honored to be part of the AAPL Ethics Advisory Committee. So that's just a little bit about myself. Okay, so qualifying an applicant for a hard money loan. You know, when Chrissy presented this to me and we were talking about new lenders working with new investors, that just presents a very interesting dynamic, because when both parties are very new to the space, I mean, it's not to pick on anybody, but it's sort of like the blind leading the blind, right? I mean, you have somebody who may not have come from the financial services industry at all trying to qualify somebody who is brand new in the space and really doesn't know where to begin. And a lot of times what I've seen with new lenders is they really don't perform all the due diligence that they really need to with a new borrower. And the reason why is, you know, if you're getting started as a lender, and I know some new lenders, and I've been exposed to new lenders over the course of time, they're just trying to get money out the door. They're just trying to get deals loaned. And I get that, and I understand that, but that should never prevent you from doing your due diligence up front with a borrower, because the most important thing you need to do when you're doing a hard money loan is you've got to be able to mitigate your risk. I'll give you a great example. So we were at the Expo last year, which is now the Think Realty Expo, and one of the lenders that is very new to the space, in our space here in DFW, and I've never seen them before in the market, they had this sign that said, no appraisal, no credit check, no income verification, no bank statements, no tax returns, et cetera, et cetera. Basically, they should have just had a banner that said no due diligence, right? And when you see that as a new lender, you do not want to get sucked into that and think you have to compete with that, because that is a recipe for disaster. That is somebody who's desperate to get business. That is somebody who is not performing due diligence, or they're either just trying to bait switch somebody to get them to apply for a loan, and they're going to perform all these things that they're saying that they're not going to do. But either way, you do not want to be part of that. That's sort of the next thing here, which says, you know, let your competitors get into trouble, not you. So don't fall into that trap. It's not the business you want. I'm telling you, the competitors that you run into that are doing this are just going to take a lot of deals back. So qualifying philosophy, what is my philosophy? My philosophy is pretty simple, and it's probably yours too, which is I just want my borrower to pay me back, right? And what I wrote in the article, and I'll just read it to you here, is you want to get enough information from your borrower to make you feel comfortable that they can make their payments under your rate and terms with the ability to pay off their loan without being under any duress. It's not any more complicated than that. So if you stick with that type of philosophy, then you should have success in you know, almost every loan that you do. When it comes to taking applications, you want to try to make this easy on yourself. If you are in a state that requires you to be licensed, or you are a traditional mortgage broker and you're doing conventional loans or conforming type loans, and you have to use the form, Fannie Mae Form 1003, well, then by all means, you're going to have to use that. But if you don't have to use it, I would encourage you not to. I would encourage you to take the applications online, find a simple form, secure form, obviously online, that you can implement, that captures enough information for you to do a credit check, background check, and capture the investor's investing strategy. That's really what you want. This Form 1003 is very complicated. Most investors don't fill it out correctly. I think most lenders don't even know how to read one of those. So just my advice on that. To make it even easier on yourself, I mean, I want to approach this from really the top 3 investing strategies, are the ones that we run into all the time, are the ones that we loan on. Primarily, it's borrowers that are buying rental property or borrowers that are flipping, right? They're going to buy a house, fix it up, and sell it. And occasionally, we do the transaction-based loan. So for a transaction-based loan, there's really not a whole lot of qualification, because you can verify the end buyer's funds before you wire in your money. So maybe you do a background check on somebody like that. Certainly a credit check would probably not be warranted in that type of situation, because you know you're going to be getting your funds returned. So to make it easier on rental applications, somebody who's applying for a loan with you, that they're going to buy a property, they're going to use you for the bridge loan to fix up the property, and then their exit is to refinance, right? That is what they're trying to do. They're going to refinance into a longer-term note with somebody else. You need to get the borrower approved for that loan. If they're approved for that loan, then you can automatically approve them for the hard money loan. It makes it very, very simple for you. You don't need to go through the whole qualification process for hard money, because if they can be approved for a conforming or conventional loan, then they should be automatically approved for your hard money loan. When it comes to flipping, then that's a different animal altogether. And I wanted to include some things in here because I've had this question before from other lenders. Hey, what do you use as your base credit score? You know, what are some of the criteria that you use to qualify somebody? If I were you and I were new and getting started, I would base my credit score with a minimum of 650. So try not to go below that. I would want the borrower to have at least 6 months of cash reserves in the bank, enough to cover their payments. And this is after they were to bring their down payment to closing. So we don't want them using all their money to bring to closing and then not have enough money in reserves for payments. I also wouldn't want them to have a debt-to-income ratio of more than 50%. Now, some of you may balk at that and think, well, no, I want to go a little bit higher and go up to 65 or 70%. In my experience, I wouldn't go over 50%. We don't go over 50% now because it's just, it puts a borrower in, it can really put them in a bind. If they have one little hiccup in their life, it can really make it difficult for them to make their hard money payment. So just a little bit of philosophy on that for me. So rentals, very simple. You get them approved for, or you use an affiliate lender if you're not doing those loans yourself to get the borrower approved. For clients that are flipping, stick with 650, 6 months of reserves, and no more than 50% debt to income. Here's my thoughts on credit reports. You know, most people look at a credit report like they look at an appraisal, right? They go right to the value, right to the score. There's more than just the score. And in my opinion, after looking at lots of credit reports over the years, I think people can tend to fall into one of two categories. Either they have some type of situational credit, like they got divorced, or there's a medical issue, or they had a death in the family, or like one of our clients last year had, he was a victim of identity theft. Those are things that if they have income and they have reserves and everything else looks good on their application, then I would forego the credit score, and certainly if you want to, you want to have your minimum and it's that or nothing, I totally support that 100%. After you get some experience as a lender, you will feel more comfortable with some of these situational type credit scenarios that will not necessarily disqualify somebody because they really are a creditworthy borrower. They just had, it's the whole notion of bad things happen to good people. And I'll walk you through an example of that here in just a second. The other side of that is you have clients that are going to apply, and you can look at their credit report, and it's just somebody who doesn't like to pay their bills. I mean, they have 90-day lates on everything. Those do not make good borrowers. And so even if their income is good and they have cash reserves, if they have a credit report that looks like they don't like to pay their bills, I would avoid them 100%. So a sample scenario, I just wanted to quickly walk through this here. You have a client applies for a $200,000 loan, say they have a 600 credit score, but they had a medical situation, and they just can't afford to make all their medical payments right now. They're working out a payment plan. But borrower makes $280,000 a year, has $75,000 in the bank, and that is somebody that we would seriously look at loaning money to in that type of situation. We would not discount them just because their credit was bad. Now, they would have to be flipping the property because there's no way they're going to be able to qualify for a refinance under anybody other than somebody that was just a private lender. So just be cautious of that. Make sure it's the right investing strategy that you're taking, or that your borrower's taking, before you do their loan. Qualifying entities. You're going to get, if you're a new lender, you're going to get borrowers that are going to come to you and they're going to say, hey, well, I'm doing this in an LLC, so you don't need to run my credit. And the reality is you cannot pull credit on LLCs. I mean, the data's just not out there for it. There's really not, you may find background information on them, and I encourage you to look for that. Send it over to a law firm. We work with a law firm that has a subscription to LexisNexis. They charge for that. They'll pull up everything on corporations, individuals within the corporation, or company like an LLC, partnership, etc. So you can get that information from a law firm and from their background check. But the way I do it, and the way we've done it for years, is we will pull credit on every one of the partners in an entity and try to take out anybody who is the least qualified and put the other partners together and base our qualification criteria off that. And this is in the article that I wrote. It explains it in a little bit more detail. A couple of other things, personal guarantees. We make everybody sign a personal guarantee. If you're a new lender, get your attorney to put together the docs, not just your note and the mortgage, but also some other docs that you're going to want in there. In addition, I know this has nothing to do with qualification, but this is just some additional stuff. Business purpose affidavits, sunset affidavits, personal guarantees. Those are things you need to make note of because you may not realize that as a new lender. Just wanted to bring that up. Background checks are very, very important. I think they're just as important as credit checks. I've been in situations where we had a borrower, or he wasn't a borrower. He applied for a loan with us last year. We did not do his loan. He needed to close very, very quickly. We did a background check on him, and he was convicted of money laundering. And then he wondered why we didn't want to do his loan. And it's like you've got to do background checks on people who come to you, especially on these quick closes where, everything's a rush and you feel like, well, I don't have time to do this. You have to make the time to do it. I've been in other scenarios too where we did a background check on two partners and they committed securities fraud, but they didn't commit securities fraud until after we had loaned them money. And it was part of this big scam that they were running. Their criminal history was non-existent, and then we got into a situation where it was a 2-year legal battle trying to get property that we loaned money on foreclosed. So it's you've got to be there are people out there, and that's what I put in the article, that are going to try to trick you and do something nefarious, and it happens especially when you're new. There are a lot of people out there that will know that you're new and will try to take advantage of that situation. So that's about all I had for this. It's basically the summary of the article. Do your due diligence. I want to move on to how to work with a hard money lender. So all you investors out there that are waiting on this call, here are my thoughts. This is part of what I wrote. This piece of this presentation is in my book. My book is called Easier Than You Think, and it's really about success in real estate investing is actually easier than you think. You follow the path that I take you through the book, you're going to have tremendous success, and it's going to take your investing career to the next level. This is a small piece in a chapter on funding your deals at the end of the book, and my advice is this. Find a local lender. If you're a borrower and you're looking for money, find somebody that knows the market. There are a lot of national lenders out there. The space is completely different from when I was getting started. There are lenders all over there are lenders in different states that loan in every other state. But find somebody local who really knows the market. Number two, you want to find a lender that has investor experience. For example, in our office, everybody has investor experience. Our admin owns 8 rental properties. I mean, we have investor experience at every level in our business development team, our operations, myself. I won't bring in anybody that doesn't have that because I want everybody to speak the same language when they're talking to one of our clients. If you find somebody like that as a lender, that is going to help you tremendously. Number 3, you want a lender that's going to help you analyze your deal. I don't care if you're renting the property, you're flipping the property, you need to know what your returns are. You need to know if you're renting a property, you need to know what your cash-on-cash return is. If you're flipping a property, you need to know what your profit potential is in the deal. You need to know how much money you're bringing into closing. And they need to be able to do that for you for free up front. You need to understand cash flow and equity and those things. And if you're not good at that because you're new to investing and you want to be an investor, but you don't have the 100% of the skill set yet, you want to rely on a lender that can really help you take care of that. Make sure that you get into a deal that is going to meet your returns. And most new investors, they overestimate the value and underestimate the repairs. That's one of the biggest challenges that they have. You want to help them try to avoid that so that or you want to try to avoid that so you don't get into a situation where you have problems with your deal and you can't make any money on it. Somebody that explains all of their fees up front. This is critical. We talk about bait and switch and all the different, I get emails every day of some new lender's terms, and sometimes it's so complicated to understand. This should be like, you should be able to talk to somebody and they can clearly tell you exactly what to expect in your loan, so there's no surprises. Finally, you can talk, there's so much more information, especially online. You can research lenders, talk to people at your meetup groups, talk to people at the investor clubs that are in your area, and find one with a solid reputation. If somebody asks about somebody, you're going to know right away if they have a good reputation or not. Ask around, ask 2 or 3 different investors that you know, and try to get their opinion and what their level of experience is. And then finally, so if you are a new investor and you're looking to get started, at the end of next week, my book, which I spent about a year writing all last year, is coming out, and it's designed to help new investors. There are actual books written on chapters that I have in my book. I've condensed what you need to know to be successful as a real estate investor. Everything from laying the foundation for real estate investing, the keys to getting started. I highlighted here the most important thing you can do right now, and I'll just tell you what that is. It's starting a mastermind group. I wouldn't be talking to you right now if I didn't have a mastermind group. I've met every other week for the last 12 years with my group. We do over 100 transactions a month. There's 3,000 rental units combined throughout the group. It's like 15 members. We've all done deals with one another. I've learned most of what I know about real estate investing from that group. If you start one, you can have exactly the same type of success. And I show you how to do that in this book. Investing strategies. If you incorporate all 3 investing strategies, wholesale, rental, flip, you can have success doing one of those. If you can combine them and you can do all 3 and learn to do all 3, which I show you how to do that, you will have way more success and get to the next level so much faster in this space. You will turn down fewer deals because you'll know what to do with them. Due diligence, everything from determining value to scope of work. This is all information about how to do this the easier way, how to leverage other people and rely on them to help give you the information you need quickly so that you can not have to try to figure this out yourself in the beginning. It's really critical that you do that so that you can get started faster and have more success up front. Because once you get experience, you're going to be able to do this on your own, and you're not going to have to rely on as many people. And then, of course, finding deals, right? It all comes down to deals. We talk a lot about that in the book, finding, qualifying, making offers, and funding them. So I want to open up this to questions. Chrissy, I think you wanted to take over at this point and take the presentation back to you.
Yep. Whoops, sorry, I didn't mean to interrupt you there. Yep, no, I'm taking it over. I'm taking it over right now. So everybody, if you had any questions, and I can't see yet, but I'll check in just a second, go ahead and ask those now. Mike's information is up on the screen, so if you have any questions for him, you're able to reach out to him directly. And then the special offer and the bonus slide that I told you about, of course, is everything that's going on between Think Realty, AAPL, and then our magazine Private Lender. And Mike, you're going to this Think Realty in Dallas, aren't you?
Absolutely, we'll be there.
Yep, so you'll be able to meet him. You guys, you're going to love it. So Think Realty's, their national conference and expo is going to be April 29th in Dallas. That's usually one of the biggest events that they hold. So if you have interest there, you can look at thinkrealty.com/events. It'll show you Dallas plus several of their other locations. Our next event for AAPL is our Certified Fund Manager course. We have a designation class coming up. We're going to go to Atlanta. We're going to be there May 17th for the day, and we're going to the very high-end Buckhead Club, hoity-toity. And you can find that on the calendar at aaplonline.com/event. And then the article that Mike was talking about that he wrote for us, if you go to aaplonline.com/private lender, it's page 52 of the March-April edition. And you can see the digital version there, and some of you who are subscribers will be getting the print copy. Should be in your mailboxes in the next week or so. So let me go back before we end today. I'll put Mike's information back up on the screen, and I'll see we've got some questions here that we can. We got a new tool, new control panel on this side, so I'm fumbling through stuff, guys. Hang in there for me. We do have some questions sitting here that I want to get answered. You know, we are hitting that 30-minute mark, so I want to make sure we don't keep you guys any longer than we promised. But Hayden is here and asking, what about crowdfunding? Should investors stay away?
You know, that's a good question. Crowdfunding for hard money, I kind of, is that what the question is? Is using crowdfunding for hard money?
Didn't get detailed, so Hayden, if you can let us know what specifically you were meeting in that area. I think I'm seeing a yes from you, but I might be looking at an answer from somebody else.
I just want to make sure they're saying not investing in crowdfunding because I don't want to comment on that. I mean, that's, you know, that's something completely different. But if it's, I'm going to just assume it's in you know, you're going to use crowdfunding for hard money. I don't know. I don't know anybody that's used it for hard money. It's like when I said on the previous slide, I think finding a local lender, somebody that you can talk to. Typically what I've seen with out-of-town lenders, and I'm not trying to pick on anybody. I just know this from a couple of clients who've used out-of-town lenders, which I would put in the crowdfunding categories because they loan, I think, in multiple states, is you getting a draw, right? That can potentially be a challenge. The draw request process is, I think, one of the things that hangs up people in some of these. At least that's from what I've seen from some of my clients. Other than that, I don't have any other experience with crowdfunding.
Okay. Oh, we just had a couple more pop up, so let's see if we can get those in the next couple of minutes. Kai is asking, can you provide any information or insight you may have regarding license requirements on business purpose bridge loans? Oh, that was a lot in one quick. I know. That was wordy, huh? So can you provide any info or insight you might have regarding license requirements on business purpose bridge loans?
Okay, license requirements are really, they're state by state. So if you do business purpose loans like in Texas, a license is not required. However, in California, a license is required. You really just need to check with your state and see what the requirements are.
Okay. And the next one from Charles is, have you done any commercial land to development lending?
Great question. No, I have not. I've done new construction loans, but just for single family, not for commercial land development.
Okay. All right, guys, and we're running just a little over the 30 minutes, so I'm going to take John's question here, and then we'll wrap up. If you guys do have any questions after we end today's presentation, you can email Mike, you can email me, and again, the presentation will be recorded, it has been recorded, and will be on aaplonline.com within the next 24 hours. So, last question for today, and John, you may have to give me a little more information here. It says, what dollar amounts do you do Florida and New York?
We only loan in Texas.
Okay.
Yeah, Texas only lender.
Okay, so that'll be the last one for today. Again, I want to thank everybody for showing up for today's presentation. We know your time.
Thank you very much.
Yeah, and Mike, you're always so great to work with. I love getting a chance to talk to you too. Guys, his book is coming out. I got a sneak peek into it. Even I understood it, and for those of you who know me, know that's pretty rough. So make sure you keep an eye on Think Realty Social, AAPL Social, and we'll have some emails that will come out to you that let you know a little bit more about how you can get a hold of that, as well as everything else that we have going on. So thank you again, everybody. Hope you're having an amazing afternoon, and we'll see you in the next presentation. Have a great day. Bye-bye. Mm-hmm.